Hello there folks, welcome into today's video. We got to discuss Palantir and PayPal, two of the most controversial stocks in the market, certainly of 2023. We're going to talk about those right off the top. I want to get into other things going on in the market. It looked like maybe a little bit of a sleepy day in the market, but I can tell you it was anything but sleepy. You got to know where to look, and I got some very important things to show you in today's video. Also got maybe a little motivation for you guys at the end of today's video as well that I think a lot of you guys will enjoy. So appreciate everybody joining me as always. Thank you so much for being here, folks. Thank you for being subscribed to the channel, and let's dive in here. So in regards to Palantir and PayPal, right, two of the most controversial stocks of this year. Only one that comes to mind that's really more controversial in 2023 is NVIDIA. NVIDIA is an incredibly controversial stock really this year, right, with the gains, the change in the business model, and all those sorts of things, right. Palantir has been extraordinary, to be quite frank, this year. 180% the stock is up. PayPal, on the other hand, is down 22% year to date, right? So we're dealing with two companies in two total different directions in terms of their stock price, right? And so Palantir, I'm hearing things like Palantir is overpriced trash, Palantir is just hype. I'm hearing other people in regards to Palantir saying things like, I think I saw something like this on Twitter, well, X, I guess they call it now, or maybe I saw it on Threads. I saw it somewhere. Somebody said, if you think you missed the boat on Palantir, you don't even understand the stock, right? Basically pushing back against, like, if you think Palantir is high at $17, just wait till it is, the price is going to be in a few years from now. On PayPal side, I'm hearing things like, PayPal's done, PayPal's finished. The price action in PayPal stock is showing that stock is finished, okay? Obviously, you've heard my take and, maybe some other folks' take on PayPal as an extraordinary risk-reward opportunity and one of the most attractive risk-reward opportunities in the market, right? So these stocks are highly, highly controversial right now, and I'm invested in both these companies. Palantir has been tremendous to me so far. We've already doubled our money in Palantir stock, already up 102% on the stock, up $50,000. And this is in the public account. I own 5,555 shares. The other side, PayPal, certainly not treating me well so far. I'm down 15K on this one and down a little over 13%, right? So two stocks in two total divergent angles. Now, let's attack Palantir first. Then we'll get to PayPal. Then we'll get to the rest of stocks. I need to talk about a lot of other stocks in today's video other than just these two, and a lot of things going on in the market. Okay, so in regards to Palantir, here's something very important you gotta know. You gotta know this. Analysts might be massively wrong in terms of their EPS projections over the next couple of years. Okay, so basically, analysts have Palantir only growing earnings per share by about 18% next year, 18 and 19% range. And that's about 17 analysts cover that number there, okay? Now, that would put the stock trading at about 66 times 2024 numbers, right? Which looks high for the company. I mean, just in the market in general, the average stock in the market trades at maybe about 20 times, maybe 15 times the upcoming year's number. So when you're trading at 66, it makes you look like overvalued trash, right? That number could be extremely conservative for next year. When you think about the government deals that are incoming for this company, it looks like NHS is going to be there, right? When you think about the commercial side of the business, when you think about the crazy demand for AIP and what that will generate for the company's Foundry product and potentially AIP if they can, get some revenue from that, start to roll in 2024, that's pretty tremendous, right? And what that can do for the earnings per share of the company is pretty unbelievable. And we know that rates are likely going to stay high for most of the year next year, if not the whole year, so which means that Treasury, basically the money they're making off Treasury should continue to come in for at least 2024, right? And then for 2025, basically analysts have them only doing 23% earnings per share growth, only getting us to 33 cents of EPS. Now keep in mind, when companies are at the infant stage of profitability, which this company's just hitting profitability this year at Palantir, right? Usually over that next couple years, many times you see the company's earnings per share growth accelerating at hundreds of percent or thousands of percent, okay? So here we are at infant stage of EPS, and analysts are like, no, only 18%, 23%. If this is a well-established company that's been profitable for 100 years, 18%, 23% is amazing. For infant stage profitability company, that's bad. Like, you need to be growing earnings per share, honestly, like, at least 50% a year-over-year basis, but really you need to be growing at like hundreds of percent in those first few years. So nonetheless, folks, I think analysts could be massively wrong over this next couple of years in regards to Palantir and the earnings per share profile for this company. Now, on the revenue side, you have basically analysts believe that Palantir is going to grow revenues 19% next year and then 20% the following year, right? 17 analysts and 11 analysts have those numbers. Now, I'm not so convinced about that, because think about this for a moment. The government deals are also coming in left and right? We got all this conflict going on. You obviously have Russia-Ukraine that kicked off last year. Now you got problems in the Middle East, and that could lead to more problems in the Middle East. And so this dangerous world Alex Karp has been talking about, right, is suddenly coming to fruition. And here's one thing we do know about Palantir, okay? Here's one thing we do know about Palantir. If you're talking about a world that is much more dangerous, and there's many more conflicts, and potentially even W's, okay? I don't want to even say that word, might get demonetized on this platform. If there's more problems between countries, we get in a more dangerous world. Palantir is more needed than ever before, okay? Palantir's products, you just can't get around it. Like, you have to use Palantir's products if you're going to talk about, battles on the battlefield. That's bottom line in regards to that, right? And so the more dangerous the world gets, the more and more need there is for Palantir, and also the more and more money that's going to be allocated toward defense-related spending, which certainly benefits Palantir in a massive, massive way, right? Now, simultaneously, more and more, like, all these companies are all of a sudden using Palantir left and right, for their AIP platform and testing out their product. And so all of a sudden, Palantir is the center of the universe when it comes to artificial intelligence, using your data as a company to, let's call it, make much better decisions. And so suddenly, Palantir is the center of the universe for the government, and it's the center of the universe for companies that need AI capabilities, right? And so it's just kind of like a magical time over this next few years. So is it possible Palantir only grows 19% next year and 20% the following year? Sure, it's a possibility, but I'm just not so sure they're only going to put up those sorts of numbers when they're the center of the universe when it comes to two massive things simultaneously. I think there's a real possibility the revenue growth acceleration could be far steeper than kind of what analysts are expecting there, right? And then if you add on, if that happens, well, that's another thing that could push up earnings per share growth in a much steeper fashion, right? Now, in regards to Europe, we know Palantir's had, more trouble recently kind of growing their business in Europe, right? Well, Europe's going to have to consider more and more Palantir's products. If you're going into a more dangerous world, the Europeans, I know, a lot of folks in Europe in general, they don't want any problems or conflicts or things like that, but you don't have a choice anymore, okay? You simply don't have a choice. We don't even know, where this Russia-Ukraine thing is going to go. We don't know if how far things are going to go there. It's still an ongoing situation. It could be ongoing for years. We don't know what's the next steps at the end of that, right? Or when even the end of that is, and what does that have ramifications for any other countries? It's a mess. And so the bottom line is, folks in Europe are going to have to consider using Palantir on a much higher level over this next few years from the government side, and also if more and more folks are using it on the government side in the European market, guess what? It's going to mean more customers in the commercial market, right? And if we think about Palantir, the great thing is this business is starting to scale out. They're still at pretty early stages of scaling out, right? But something I'm starting to see that's really been a change just in the past 12 to 18 months is Palantir's got a lot of these happy customers that are now starting to tell other companies about the wins that Palantir is helping them and explain, here's what Palantir did for us. We spent this much on it. It helped us save this much. And that gets a lot of other folks very excited about Palantir and hey, I should probably consider using Palantir for my business, right? Also on the government side, same exact thing. If one agency, right, or government body is using Palantir for something, there's a much higher probability another government agency is going to end up using Palantir's products, right? When you got a happy customer, they tell a bunch of other people, right? If I love a restaurant, I'm going to tell a bunch of people. I'm going to want to take a bunch of people there, right? It's word of mouth has always been the most powerful thing in business, and it still remains to this day the most powerful thing in business, right? So they're getting to that sort of scale now where word of mouth is spreading about Palantir's fabulous product and how much it's helping folks. And then I can tell you that cannot be stated enough. That's what we call getting to scale, right? It is very similar Amazon, Tesla, happy customers tell more and more people, and so on and so forth, and you just kind of keep building bigger and bigger and bigger, right? Now, in regards to the valuation of the stock, people think it's way overvalued, and the reason being is the stock's up 178, 180% year to date, whatever, right? Here's what I can tell you about that. That is completely irrelevant. It doesn't matter if the stock's up 50,000% or it's down 50,000%. Okay, that would be technically impossible. Okay, but it doesn't. It's completely irrelevant. You got to look at the PE ratios. You got to look at the future growth rates, and then be able to justify, like, okay, this industry, are they trading at a cheap valuation, a fair valuation, things like that. Companies like a Palantir would usually trade at, if they're slower growth, we usually trade at around a 30, forward P, something like that in this industry with these sorts of sticky business models. Palantir's obviously trading about double that, right? But once again, this is a company at infant stage of profitability with crazy opportunity over this coming years, right? So when you take that into account for a moment, I think it needs to be said that I don't think there's any way you can actually say this company's super overpriced at all right now. And also remember, if you want to go to the whole pricing game, this stock was like $30 to $40 a share 3 years ago, right? It's $17 here today, and think about all the progress this company made just in the past 3 years. Like, that's incredible. And so, yeah, I'll always push back against, the stock's up a lot, so it's overvalued. It doesn't work like that, man. NVIDIA, I can make an argument that NVIDIA, and I don't even own NVIDIA stock, by the way, I can make a very strong argument that NVIDIA is undervalued today. Stock's up like 200% something this year. I can make a strong argument that NVIDIA is undervalued today and should actually be trading somewhere between $650 and $850 a share, folks, okay? And I can make a strong freaking argument in regards to that, okay? Now, we also do have to remember that S&P 500 inclusion is likely going to be coming for Palantir in the next couple quarters. It's not a guarantee. Don't get your hopes up too much. But I can tell you, based upon all the metrics you need to hit to get inside the S&P 500, I would say likely in the next couple quarters, Palantir's in the S&P 500. And so if you're talking about the stock price, that's obviously very bullish for the stock price of Palantir, right? In a substantial way. So when I look at all these things overall, I do not think Palantir should be nearly as controversial as this stock is. I think people should be able to look at it and either you're on the wagon or you're off the wagon. But I don't really think you can make a very compelling argument that it's overvalued unless you just are looking at simply one metric like a PE ratio or price to sales ratio and saying, well, this stock trades at that. Well, does it have Palantir's growth? The answer is no. Does it have Palantir's opportunity? The answer is no. Does it have Palantir's combo of government and commercial? No, okay? So these are just all things to kind of keep in mind in regards to Palantir, okay? Now let's go ahead, let's jump into PayPal. Then we'll talk about the rest of the stocks, things going on in the market, some fishy things I saw today, and we'll go from there, okay? PayPal. People say PayPal is done. PayPal's finished. Absolutely finished. When I hear that, I say, okay, emotional talk. Let's look at the data. Let's look at the numbers. Here's what we find. PayPal's, this is their most recent quarter they reported. Net revenues, this is on a GAAP basis, okay, generally accepted accounting principles. 7% revenues were up. Operating income up 48%. Earnings per share up 414%. And those are GAAP numbers. Does that sound like a company that is done? A company that is finished? Anybody that I think, has gone through one semester of business school should know, no, that's freaking amazing, okay? What about on a non-GAAP basis? Non-GAAP basis, because some people like GAAP numbers more, some people like non-GAAP. I look at them both, okay? Non-GAAP basis. Revenues were up 8%. Operating income was up 20%. And earnings per share was up 24% year over year. That does not look like a company that is done or finished whatsoever. If their revenues were down 7% and their operating income was down 48% and their earnings per share was down, in an epic way, I would say, yeah, you could be right. Maybe the company is finished. But these numbers don't smell finished at all. And keep in mind, we've been actually in a goods recession for all these, the past year or so when all these quarters that PayPal reported. And they still put up these numbers. Like, imagine if we get out of the goods recession, what PayPal's numbers could potentially be, right? And on top of that, you got Alex Chris, just started at the company September 27th. And this is a man that comes over from Intuit. You can't get too excited about a new CEO and president, but it is, I think it's pretty darn good when you can attract somebody that's a top-tier talent from one of the most respected companies in the entire stock market and one of the most respected stocks in the entire stock market, which is Intuit. So I think he's going to be able to do a few things. And the great thing for Alex Chris, he doesn't need to fix a million things. This is no disaster. This is a company he's coming into. Look at the numbers that he's coming into. I mean, they're freaking phenomenal on a GAAP and non-GAAP basis. The fact is, Alex Chris only needs to tweak a few things here and there, make sure everything's running smoothly, and be able to tell the story better in regards to shareholders in the stock. And oh my gosh, okay, we're off on a rocket ship ride. And the beautiful thing about PayPal, right, is our freaking valuations on the floor. We're talking about an 11 times this year's numbers for PayPal. 11 times this year's numbers? It's a joke. That's absolutely insane, folks. Absolutely insane. That's what makes it such an attractive risk reward. Now, what I want to see is, has PayPal stock performed severely worse than their peers? Or is the reason the stock has gone down so much is really just the sector they're in, the type of stocks they're in, that these stocks just can't do anything right? So let's go ahead and take a peek here, okay? So we can compare them to kind of Hood, obviously Affirm, Square. If we want to take it a step further, we can add on SoFi, okay? So this is since basically the Federal Reserve started raising rates. So it's right around here, okay? So since the Fed started raising rates, roughly, Hood's down about 27%, SoFi's down over 30%, PayPal's down about 49%, Square's down 56%, and Affirm's down almost 57%, okay? That's since the Federal Reserve started raising rates. So what does that tell you? I can tell you exactly what that tells you. That tells you that all these stocks were doomed because the Fed's raising rates. And it has nothing to do with their business models. Their numbers can be phenomenal, their revenue and their earnings per share, but the bottom line is, like, people looked at it and they said the Fed's raising rates. We want no piece of these stocks. And the thing is, like, PayPal is not the same as Square. PayPal's not the same as Affirm. PayPal's not, in no disrespect to SoFi, PayPal's not the same as SoFi. PayPal's not the same as Hood. But they get put in the same category. And so the bottom line is, if the machines and the humans are all just saying, I don't want any piece of these stocks, the Fed's raising rates, that's what you got. That's what you got. And that's why that stock is down as much as it's down. There's nothing really the stock could do, right? And it's performed better than Square and Affirm, so cool, but it's not saying much, right? The bottom line is people want nothing to do with these fintechs when the Fed was raising rates. But the question is the Fed going to keep raising rates, right? And we're dealing with the highest Fed funds rate we've seen in 20 plus years now at this point in time. It looks like the Fed's about done raising. You can make an argument that maybe they'll raise one more, but listening to what I listen to when it comes to these Fed officials, former Fed officials and current Fed officials, it sounds like they're probably done, okay, in terms of raising rates. They'll probably keep us here for a little bit, which means the pressure is going to alleviate these stocks in 2024 because the Fed's not going to keep raising 6, 7, 8% and so on and so forth, right? We're going to likely stay where we're at until maybe we start to see some weakness in the economy. If we start to see some real weakness in the economy at some point in 2024, then maybe the Fed will start to consider cutting rates. But the work's already done by the Federal Reserve. They already did their work, and now they're just kind of sitting on that work and letting things play out there, right? And so ultimately, when I look at this story, when I look at the PayPal story, it's shaping up pretty darn good from several different angles. And, you know, to take this one step further, did you guys see this? I thought this was really important. No one was really talking about this yesterday, but I was like, this is so freaking important. Everybody needs to be talking about this, okay? A coalition of housing trade groups, the Mortgage Bankers Association, the National Association of Realtors, and the National Association of Home Builders all sent a letter to the Federal Reserve. And basically what this letter was basically begging for is for the Federal Reserve to stop raising rates, okay? I can tell you, the Fed takes that type of stuff very, very serious. And when you see something like that, I can tell you the Fed's going to be like, okay, these guys are starting to beg us not to raise rates anymore. Okay, that's something we got to consider strongly. The next step is starting to beg to lower rates, right? And then you're dealing with a whole different dynamic. If you start to beg for the Fed to lower rates, then you're in a lot of trouble, okay? You're in a little bit of trouble if you're begging the Fed to stop raising rates. In a whole different ballgame if you start to beg them to cut rates, right? So that's why just another one of many reasons that I think the Fed is on this path and kind of looking at inflation numbers and whatnot where they're going to keep. Because at the end of the day, now we're at a point in time where the federal funds rate is significantly above CPI. That matters significantly. So the question is, when will I stop buying PayPal stock? And by the way, the company has buybacks on right now. So they're going to be able to buy back stock at, in my opinion, the best prices this company will likely ever see. We'll see what happens, obviously, but I think it's a pretty dang good time to be buying back shares at the current P the stock's at and forward P, right? So I'll stop buying this stock in the first quarter of 2024 at some point. First quarter of 2024, I will be done buying this stock. I'll finish off my buys. I'm obviously continue to buy it through year end, and I'll buy it some in Q1, and then I'll be done. And then I'll have my position fully built out, and then it'll be just holding and, seeing what happens. I think I'm going to do very, very well on PayPal over time. But the state of the stock price, I think doesn't really have much to do with the fundamentals of the business. And I think we're going to see a very, very nice recovery, very similar to and I think we're going to see that recovery in 2024, very similar to what we've seen in Palantir this year. We'll see how it all plays out. And by the way, PayPal's not going to be the only beneficiary. You're going to see the other companies benefit from that as well that are in this space. You'll see stocks like Square and others likely bounce as well. But yeah, so very exciting. Now, weird trading day today. Weird trading day. And it kind of looked like a sleepy day. So the public count today was up about $13,000. Kind of a sleepy day overall. Anything less than $20,000 move for the public count is pretty sleepy, right? But I looked beneath the surface, folks, and what I saw was not sleepy. Was, let's call it pain. Red Dead Redemption, okay? So I was looking over a bunch of these safety stocks that have been slaughtered all year. And they're still getting it. Kellanova, what a change of their name, okay? Instead of just Kellogg's, now they call it Kellanova. Down another 2.33% here today. Stocks now pushing down over 27% year to date for this wonderful safety stock. Dollar General down again today. It might go under $100, folks, okay? This stock is now down 58.3% year to date. Absolutely incredible. Monster Beverage is just continues to get nailed. And this, great balance sheet on Monster Beverage, obviously. It's always been one of the best balance sheet companies you'll be able to find out there. Stock's fallen from $58 back on August 6th to now it's trading at $49. It seems like every day you open up and Monster's down. I mean, look at the stock chart. It's pretty self-explanatory there, right? Clorox, oh man, these safety stocks, these are just good stuff, right? Since July 30th, which isn't that long ago, stock was at $164, is down again today. It's now pushing $122 on the stock. And the thing with these babies is, guys, look at the stock charts. They're not even showing signs of a bottom. See, when I showed you PayPal, right? Let's go back to PayPal. The stock chart is showing clear as day what I would call a bottoming formation that's basically going on with PayPal. With a lot of these safety stocks, they're not even showing like a bottoming out yet. They're just kind of in like a straight down, like just vicious cycle in regards to, I mean, look at the Clorox chart. It's like, when's the bottom for the stock? Are we talking jam or are we talking jelly? J.M. Smucker's Company. The resumption of the crash is going on for J.M. Smucker's Company. Down again here today, stocks pushing down almost 30% year to date. General Mills, the General, right? Oh gosh, so the stock was down again today, now down 27%. So I haven't told anybody on YouTube yet, okay? But I have a Twitch show, and it just started here recently, okay? And on this Twitch show, it's like a market close show, okay? And so essentially, I'm reacting to this one part during the show here today, and this guy is talking about, I love General Mills, but I sold the stock because of the price action. It just keeps going down. This Wall Streeter. And I just was like, oh, what a bad strategy. And these guys wonder, all these Wall Streeters wonder why they can't even keep up with the S&P 500. They wonder why. Because of these freaking decisions they make, like, I love this General Mills stock, I love it, such a great stock, blah, blah, blah. And the stock goes down, like the worst year for General Mills you've probably seen in a long, long time. And then you sell the stock down here. I mean, ask Warren Buffett what would he do. If he loved General Mills, would Warren Buffett be buying that stock? Would he hold the stock? Or would he sell the stock? Well, if Warren Buffett loved the stock and it was crashing, Warren Buffett would buy more dang shares, okay? Or at least hold. I don't remember Warren Buffett ever saying, sell the stocks you love at horrible prices. Like, no, that's not a thing. But that's what these Wall Streeters do. It cracks me freaking up. Campbell's flipping flapjack and soup. Down again today. That stock's down almost 31% year to date for Campbell's Soup. Oil and gas stocks I saw got hit today, but specifically it was really ExxonMobil and Chevron, which was weird because ExxonMobil is going to dilute shareholder value in a massive, epic way because they just did a deal, I believe it was for Pioneer Resources or something like that. I believe it was about a $60 billion deal. So they're going to dilute their shareholder base by, I think it was like 14%. So not a small dilution. But Chevron got hit along with that, which I just found fascinating, but that could have to do with the weightings of different ETFs and, the machines selling certain stocks and things like that. Now, something's going on with Netflix, folks. Something's going on with Netflix. Because yesterday, if you remember correctly, Netflix was by far and away the worst performing stock of big tech. Well, today, it's again the worst performing stock of big tech. Someone's liquidating shares of Netflix right now. I don't know who it is. I don't know how many shares they got left to sell, but I can tell you, for Netflix to be by far and away the worst stock of big tech yesterday and to be the worst stock again today, somebody's doing some sort of liquidation there. Okay, something's going on. I don't know what, and I don't know what's in the plans, and you don't know if it's an insider or whoever. Sometimes you can get reports after the fact, SEC reports and things like that. But for right now, we don't know. All I know is somebody's liquidating shares. You don't get the moves like that in Netflix back-to-back days unless something strange is going on. Chipotle. So Chipotle stocks had a tough month. It's down about 6%. But here's what I heard, okay? Chipotle is going to raise prices again, okay? Now, they took a little breather from price raises, but, they raised prices like 3 times in a matter of 13 months in the past. So here we have Chipotle raising price, and I said, how much is like a burrito in New York City? So I went Uber Eats, and I was curious, in Manhattan, whatever, right? And on Uber Eats, burrito bowls and burritos start at $14.25. That's no additional fixins or anything like that. I'm like, what? That's a starting price? I'm like, could you imagine after your delivery fee and your tip and all the other stuff? I'm like, holy smokes, that's insane. I say, well, okay, what if I went to the website and acted like I lived in New York and said, okay, let me see how much a burrito would cost me in New York City to get it the way I like to get it, and I would go pick it up, okay? And here's what I found. A burrito the way I would want it, $18.70 before tax. So after tax, you're pushing $20 plus, folks. $20 plus for a flippin' flapjack and burrito in New York City. I mean, these are prices that it used to be like that you would think for like a sit-down restaurant. Like, I'm going to go to a sit-down, nice Mexican restaurant and spend $20. No, it's like a Chipotle burrito, $20. Are you flipping my flapjacks, folks? Wow. Interesting times. And we'll see if eventually this stuff catches up to Chipotle's business model. But, raising the price like that, it could potentially help margins, but it could also hurt if you're talking about some sort of situation where you're less busy, so you're moving less volume. It causes product to be less quality, right? And maybe those pinto beans have been sitting out there for a little longer than they usually should, and it's let's call it more of a poor product, then people aren't as incentivized to come back. So, it's very serious matters when it comes to price raising in this sort of environment. That's what I can say about that. Now, I saw this, and I was like, what? So the IRS is basically saying that Microsoft owes them $29 billion in back taxes, folks. I said, is that a typo? Now, Microsoft says it's a bunch of BS. They're going to fight it in court and all these sorts of things. And yeah, I think if somebody's saying you owe them $29 billion, you're going to fight it in court. But nonetheless, folks, I saw that and I was like, that's monumental. Here's the deal. Microsoft, in terms of cash and cash equivalents, they have about $34 billion. So if that was accurate, they would have to get rid of almost all of their cash on the balance sheet. Now, Microsoft's a profit machine, so, they could replenish that over time, no doubt about that. But I just do think it matters because, we're talking about an epically big number there. So we'll see how all that trades out. But man, I thought that was interesting. And the IRS really wouldn't say something like that knowing it's going to make headlines unless they feel like they truly do owe $29 billion, and we'll see how the whole fight goes. But I'm like, wow, okay. No, I saw this. This is really fascinating, right? It was an article by the Wall Street Journal here today. It said, a gilded age is fading in luxury brands. And one of the reasons is what I went over yesterday in yesterday's video, right, which was showing you Louis Vuitton's basically numbers here recently. And there's a clear weakness starting in their numbers. They're still very healthy numbers, but there's a clear weakness versus what it was a quarter ago, 2 quarters ago. And so, I thought about this a little bit, and I was like, maybe we are going to be leaving this, gilded age, if we want to call it, for luxury brands and those sorts of things, because we know, all these brands have been doing phenomenal for the past decade, from Rolex to Louis Vuitton to Gucci, all these different brands, right? But I thought about it a little bit, and I thought about how many new millionaires there consistently is, right? The number of millionaires globally will grow by 40% the next 5 years, even as rising rates, Russia, Ukraine, blah, 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 is sinking asset classes and private fortunes. This was written last year, right? By 2026, there will be more than 87.5 million people with at least $1 million in wealth, up from 62.5 million people in 2021, right? The number will grow faster in emerging economies, of course, yes, with China almost doubling its millionaire population, the forecasts show. Hey, that's bullish for Macau, I can tell you that much, okay? Now, this is a little outdated what I'm showing you here. There's a lot more millionaires than where this chart I'm showing you. This was as of 2019, okay? Since 2019, I can tell you there's a massive amount more millionaires today than there was in 2019. But if you look at these numbers here, okay, I think there's 5 markets that really come to mind. And I think almost all these different, places will grow their amount of millionaires substantially over the coming years. But India, India didn't even have 1 million millionaires back in 2019. I can see India getting to 5 million plus millionaires easily over this next, let's just call it decade to maybe 15 years, right? Easily. When you think about how much India's economy is going to grow, how many big businesses are going to be built there, how many people are going to work underneath the top dog CEOs that might grow into people that become worth hundreds of millions of dollars or billions of dollars, right? But you got to understand, for every big company that's built, there's a ton of people underneath that get stock options and all these different things that grow their wealth immensely as well and become millionaires along with the ride, right? They might not be the person that has $1 billion exit, but they might have 5 million because their stock options and all those sorts of things. I think about China. China's going to hit 10 million plus millionaires easily in this decade, right? And the United States is on its way to 30 plus million millionaires, right? When you think about just a real estate market alone, and then they're going to start trying to make 40-year mortgages popular. You start making 40-year mortgages popular over this next decade, real estate prices are going to go up a whole lot more, okay? If you're going to talk about, and that's what they want to popularize, a 40-year mortgage. And I can tell you that's just going to make prices go up a lot more over this next 10, 20 years, right? So you're consistently growing so many different millionaires, and so ultimately, there's always an appetite for luxury brands, because a lot of times when people go from, wherever they were at in life to then becoming a millionaire, you buy expensive things. It's what happens, okay? You want to feel like you made it. And so you go buy the Louis Vuitton purse, you go buy the Rolex watch, you go buy, the fancy car and those sorts of things. That's how it is, right? And during that Twitch live stream today, somebody asked me, toward the end, they said, when did I become a millionaire? And it was when I was 28 years old. It took 10 years to get there, right? I started taking money games serious at 18 years old. It took me a decade to become a millionaire, right? And when I certainly reached there, there was definitely an appetite to, get nicer things, right? Whether it be homes or cars or those sorts of things. There's a reason I got a Model X in my garage and a Model S Plaid, right? Because I felt the need of I want to have the best cars and all these sorts of things, which best is relative, right? Somebody wants a Ferrari, somebody wants a Rolls Royce. Everybody's got different opinions on what's the best to them, right? But that's the come up. And so as long as you always have people exiting and coming into the millionaire class, the luxury brands are always going to be there, and they're always going to be putting up their numbers, right? Always going to be putting up their numbers. And for you guys out there that, you might be watching and you're not at that level yet and it seems so far away, believe me, when I was 18 years old, man, becoming a millionaire seemed like so freaking far away. I couldn't even imagine it, right? I'm making $7, $8 an hour, working at Einstein Bagels, working at Walgreens. That seemed like a mile away. Back then, I couldn't even imagine having a house, a $300,000 house. Man, could you imagine that? That's crazy. Never mind a millionaire. But I can tell you, you work hard at this game for year after year after year, and you're going to have setbacks. You're going to have time periods when you go backwards. You're going to make mistakes. You're going to fail sometimes. That's part of the game. That's part of the process. There's no such thing as it's just perfect and you're just up and away, and there's no trials and tribulations and mistakes you made and things you learn from. And it's all about the journey. Life is all about the journey, right? It's not just a destination. It's all about the journey and what you learn to get there. And I just tell you guys, for those of you watching this video right now, that you're not that millionaire yet, but you want to become that over the next 5, 10, 15 years, you can absolutely do it. It takes a lot of damn sacrifice. I can tell you, I wouldn't have went from 18 to 28 and become a millionaire in that decade if I didn't sacrifice again and again and again. The amount of times I sacrificed this or that. Oh, man, I really don't want to work today, but I'm going to go to work anyways. Oh, I'm going to work this extra shift. I've already worked 10 hours today, but I'm going to work an extra shift so I can pick up that extra time and a half, right? I'm going to do this. I'm going to do that. I'm going to sacrifice hanging out with these friends over here so I can go ahead and put in this time. It's a lot of damn sacrifice, okay? I'm not going to lie to you. You want to reach those sorts of levels, but if it was easy, everybody would do it. Why is not everybody a millionaire? Because it's damn hard. That's the bottom line. There's a lot of sacrifice. It's a lot of freaking work. It's a lot of time and attention, day in and day out. And, you just have to be willing to put in that work if you really want to get there. But you can absolutely get there. And you can pull it off in a 10-year span. But damn, it's going to take a lot of freaking work and a lot of damn sacrifice. And, it's part of the process, folks. It's part of the process. Yeah, I don't know anybody. I've been fortunate to know so many millionaires, multimillionaires, and people with some crazy net worths. I don't know any of them that didn't get there without just, having to put in a lot of sacrifice and having to work really hard and smart for a long period of time. So anyways, that's just a little food for thought there, guys, okay? You could absolutely do it. You got to know the game in those sorts of things, folks, okay? Make sure you join my Patreon down there. That's going to be pinned comment down there. You get to see the exact moves I'm making. I'm going to be buying stocks in there in less than 48 hours. The most valuable thing to me in regards to Patreon is you get to see exactly how I build up a portfolio. Somebody that's been doing this for 15 years. And I invest modest amounts of money every single week, usually $150 a week, every single week. And you can see exactly how I build up that portfolio. Today, the portfolio is $6,000 something now at this point in time. Likely hit $10,000 probably in Q1 of 2024 and continue to build that beast out. And so, imagine the public count. That's a portfolio everybody in the private stock group has been able to see me build over the last 6 years or so. They built that from nothing to now is, $1.77 million or whatever. Like, you're getting to see the ground floor of me build this Patreon portfolio up and exactly how I do it and how I hedge and all those sorts of things. It's incredibly valuable for such a freaking cheap price. It's ridiculous. It's like, a joke. You can't even get a Chipotle burrito in freaking New York City for the price of joining in there. So make sure you get in there, guys. Pin comment down there. Much love as always. Thanks for being subscribed and have a great day.